Good morning, everybody. This is my second video. It is November 7th, 2023. I'm going to show you what main technicals you need and what main indicators you need to be a successful trader, whether you're day trading, swing trading, or long-term trading. It really doesn't matter. As you can see on my screen right now, I'm looking at a stock symbol PXMD. That is the best mover today by far. It's done 160% at the moment. It did hit a day high of $10.26, so it's a pretty solid mover. This has been a very good week for momentum traders. A lot of big movers in the marketplace, low float, a lot of volume. So let's take a look at our indicators and see how you would trade something like PXMD. First off, you want to change your time interval to a daily time frame. So you want to do today. Here you want to go to 5-minute time frame. And you can see every 5 minutes what this stock is doing when it comes to volume, price action, movement, up, down, red candles, all that good stuff. Now, any books you have related to stock trading, if it's overcomplicated, I would recommend putting that to the side, back burnering that. When it comes to trading, you need just simple indications. You need simple tools to really be successful. I think there's a lot of news out there, a lot of noise out there, that confuses the traders and makes you actually lose money instead of making money. So here's my top technical indicators here on my screen. So the first thing I'm going to review is a 200-day moving average. Now, what is a 200-day moving average? Is exactly what it sounds like. It's the average price of a stock in a 200-day moving period. Why is this significant? Because that is going to be your base resistance or your base support for a stock. Anytime you see price movement above or below that mark, you're going to know exactly what the stock price is going to do. You have a good indication or a prediction. The next technical down is called volume weighted average price. Why is this important? This is the place where most traders are buying and selling the stock at. That's a specific price. So for example, on my chart, if you look here, you're going to see a yellow bar, a yellow line. This is the volume weighted average price. So right now we're on the 5-minute time frame. We're looking at today. As you can see from the open, the VWAP or weighted volume average price was at $3.15. Right now it is at $7.79. This tells me that the majority of the buyers have bought in this area for today on the 5-minute chart, which is from about $3.10 to $7.76 roughly. So if right now you buy this stock at anything higher than $8, you're taking a risk. There's a high chance it's going to crash down on you, right? Because the majority of the buyers are in under that $8 range. Now, what's the next most important technical? The next important technical is volume by price. This is, to me, one of the most overlooked technicals when it comes to trading. This is going to tell you at what specific price, how many people bought the stock in a long-term or short-term time frame, okay? So if you look at my chart here, you're going to see on the right side, you have these blue bars. This is your volume by price, right? So you can zoom out. As you zoom out, they change. As you zoom in, they change because it's based on historical charting, okay? So on the short term, for today specifically, the majority of your buyers are at $6, right? That's the most concentrated buyers are at $6. So if you know that, you can start to predict your entry and your exit point. So if the majority of the buyers today own the shares at $6, you buy at 8, guess what? You're taking a big risk of losing money, right? So unless you see momentum, price action, resistance break, there's no reason to buy at $8, right? So I would definitely wait to be somewhere between that $6 and $7 range at the most to lower your risk, to make sure you're set up for the best success on the day to profit, okay? Now, this is your technicals, okay? You only need 3 main technicals: 200-day moving average, volume weighted average price, and volume by price, okay? Now, when it comes to main indicators, what do you need, right? So that's always the tricky part, because there's so many indicators out there. People get confused. They have clouds, they have lines, they have all of this stuff, it gets overwhelming. You only need, you know, 4 main indicators, right? So the first one you need is called the Bollinger Bands, right? What are Bollinger Bands? Well, if you look at the definition online, they overcomplicate it for no reason. All they are boundaries for the high point and the low point of the stock price in a time frame, right? So if you look here on my chart, you're going to see a top white line and a bottom white line. This is your lower Bollinger Band. This is your upper Bollinger Band, right? So anytime that the stock price breaks above this upper line, you're bullish. Anytime the stock price breaks below this lower line, you are bearish. Very simple, right? So that's going to be your boundaries for the stock price. So as the stock moves, it's always going to most of the time it will move within these boundaries. Sometimes you have a volume burst and it'll break above it. Sometimes you'll have a red candle and it will dump below that bottom Bollinger Band. Okay, that's all that those are. Those are just your boundaries. Okay. Next important indicator. This is probably one of the most important ones. It's called the MACD, or moving average convergence divergence. Okay. This is also a very simple indicator. Don't read the description, it will just confuse you. All this tells you is if you are in a given time frame, if this white line, which is your MACD signal line, crosses above the red line, which is your MACD line, the stock is bearish. Anytime it starts to curve down, as you see here, it's curving down right now on PXMD, that means you're going to have a bearish sentiment coming up, right? So this is going to be one of your most accurate, your precise, and your most real-time indicators. Whenever you're day trading, especially, you want to use this indicator. So this will tell you whenever you see this white line curving down and about to cross below your red line, which is your MACD line, that means that it's going to become bearish. See, we just crossed down. Now check at the stock price here, right? So 744, 738, right? So you're going to see it bounce up and down, 750, right? It's going to continue to trend down now. Unless something happens and you get another short volume burst on the 5-minute chart, this will keep trending down. So let's watch it for a second. 745. Okay. There we go. 739, 755. So it's a lot of volatility going on, but for the most part, if you look at the MACD, this is a bearish signal indicator. Unless a lot of volume comes in here in the chart, in the 5-minute candle here, it's going to be very hard to curve this signal line back up, right? It's possible, it's not impossible, but it's more difficult once it crosses below, okay? Now, what is the next most important indicator? Something called the Relative Strength Index, or the RSI here. Now, why is this important? This is an indicator that tells you when the stock is overbought or oversold. When the stock is overbought, guess what? Everyone's going to want to start taking profit, right? So should you be entering at that point? Probably not. If a stock is oversold, that means that a lot of people have sold out of it. There's no one holding. So should you buy into it? Probably not, right? If you buy into it, you might get stuck in there for a long time. It might continue down further. You really don't know what's going on. So your sweet spot is right in the middle of overbought and oversold territory, right? So if you buy the stock in that middle range, you have a better chance of succeeding and making a profit, okay? Now, in the Relative Strength Index, or RSI, what is a oversold territory? Anything below the 30 line. Okay, so let's look at our indicator here. So you see here we have 20, and then here we have 80. So anything between the 30 mark and the 60 mark is your sweet range. Okay, so if you're above the 60 mark, which right now looks like PXMD is right at that 60 mark for the day, or below, you're still in a good territory to potentially buy and profit from the stock, right? Because you're not just overbought yet and you're nowhere near the oversold status, right? So as long as between the 30 and the 60 line, you are probably going to have a good chance and a lower risk of losing money. So you're going to have a high chance of making profit, okay? So this is very basic stuff. This is the most important things you need to know when it comes to day trading. Whether you're beginning or if you're an experienced trader, I think most agree that these are some of the most important indicators. Now, you know, there's a lot of stuff out there like clouds and lines and different indicators like accumulation distribution. There's a lot of stuff out there, a lot of different studies, but I have found through the last roughly 14 years that these are the main ones that have worked the best for me personally. They made it very easy for me to trade the stock, to know exactly what's going to happen. And I base all my decisions on these three main technicals and these four main indicators, or sorry, three main indicators, right? So this is the most important pieces for me. Whether there's news, whatever the market is doing, if the Fed's having a meeting, if I'm going to be trading a stock, I'm going to be using these technicals and these main indicators to decide if I'm going to enter or exit a stock or a position. Hope that helps. That's all for today. If you guys have any questions, please post them down in the comments. Please don't forget to support the channel. Thumbs up, subscribe. I really appreciate that. Thank you guys. Have a good one.